Good morning, David, and thanks to Market Open for arranging the event. Great lineup today. We're pleased to round it out with an opportunity that's very much leveraged to gold, to copper and silver. It's a basket of metals that's certainly got a lot of positive sentiment around them at the moment. And we've been focused on building a substantial inventory of those metals down at Ravensthorpe since we listed in 2021. And I'm going to talk to everyone today about the multiple opportunities we see to not only continue to grow that inventory, but also commercialise the metal that we've currently got on the books. Can we skip through to slide number 3, please? So if you buy a share in Medallion, you become the proportional owner of a business that has JORC compliant resources of 1.5 million ounces of gold, 120,000 tonnes of copper metal, and 11 million ounces of silver. That metal's contained in 2 distinct deposits. They're located 10 kilometres apart. They both daylight at surface, and they're both open at depth and along strike. Our ground holding is dominant across both of the prospective stratigraphies for both of the deposit styles. And both of those ground holdings are significantly underexplored. The assets themselves are situated in the southern goldfields of WA. It's in a region where there are 2 significant resource projects underway at the moment. That demonstrates that you can permit, you can build, and you can operate a mine in Ravensthorpe. In terms of our flagship asset, the Ravensthorpe Gold Project, it's significantly de-risked. We're on granted mining leases. We're clear from a heritage perspective. We've advanced the permits substantially. There's a PFS that's been completed. We've declared all reserves. Based on current spot prices, the project generates an NPV after tax of over $500 million at those current spot prices. And it's on sale at the moment via Medallion, which has got a market cap of circa $18 million at the moment. We're in the right commodity. We're in the right time in the right vehicle. We offer investors exposure to new discovery, to continued resource growth, and also development optionality on those existing resources, all in an environment where the $8 gold price is trading at record highs and the equities are yet to catch on. Next slide. Just touching on corporate, 308 million shares out. We showed cash and receivables at the end of March of $3.5 million. That receivable arises from us renting our camp to our neighbours, Mount Cattlin down in Ravensthorpe. There's an enlisted investment in our neighbours' nickel search, and there is a loan from our major shareholder. It's only repayable in the case of the change of control event or if we make a decision to build the mine down at Ravensthorpe. So as mentioned, market cap $18 million. If you adjust for the cash, the debt, the listed investment, it backs out an EV of approximately $17 million or $13 an ounce on a gold-only basis at Ravensthorpe. And that's relative to a peer group that's trading at on average $40 to $50 an ounce. It's a steal given the quality of those ounces. And we'll throw in the copper at Ravensthorpe and then also the metal at Trilogy for free. In terms of leadership, I won't go through the bios here. Those names will be known to people who know the sector in WA. Non-executive directors, forefront of the industry, forefront of capital markets. We all share a vision of building that mine at Ravensthorpe, and that mix of technical and commercial experience is a great overlay to a young, capable, very hungry senior management team that's driving the growth at the assets. Next slide. So turning to the flagship asset, the Ravensthorpe Gold Project, we've got the dominant land holding in the Phillips River mineral field, and what's critical about that are the tenements that straddle the Annabelle Volcanics, and they're mapped in yellow on this slide. It's these rocks. They've hosted all of the historical production. They are host to all of the known resources and the known prospects. They're also host to the pegmatites that Arcadium is mining at Mount Cattlin. There's been about 130,000 ounces of gold, 20,000 tonnes of copper metal produced in this area over the journey. Gross metal value of that material in today's prices is a rough 60-40 split between the gold and the copper. We think copper is going to have an increasingly important role to play in the Medallion story as things move forward. We're certainly seeing that in the drilling at depth at the Cundit Mining Centre. Now, it's at the Cundit Mining Centre, located at the southern end of the field where the Archean dips beneath the Proterozoic and continues on to the south. It's here where the bulk of the activity, the bulk of the expenditure, the bulk of the drilling's taken place, and this is where the bulk of the resource growth has come from. Of the 54 kilometres that we've drilled thus far, since listing. Approximately 50 kilometres of that has been at the Cundipp Mining Centre, growing the resources to where they stand today. So Cundipp will continue to be the focus, but at this point in time, the attention of the business, the attention of the project team has really turned to the regional discovery opportunity. Over the next, we made an announcement last week, we're mobilising a 2,500 metre drill program to RGP, testing 4 priority targets across the Annabelle Volcanics. They're highlighted in this slide here. These are early stage, potentially high impact targets, 3 of them with no bedrock drilling to date, plenty of news flow in the short term. What we're striving here really is to uncover a new Cundipp style high grade gold copper sulfide lode and then confirm the prospectivity of the entire belt. Next slide, thanks. So moving on to the Cundipp Mining Centre. The Cundipp gold copper mineralisation, and I guess across the field more generally, it's not typical of your general shear hosted WA gold deposit. And the most obvious difference is the significant copper credit. We think the closest analogy is probably Silver Lake's Deflector project, specifically as it relates to mineralogy, and then more generally as it relates to scale. Deflector has been a tremendous success for Silver Lake after overcoming some scepticism pre-development. We see a lot of similarities between the two assets at similar stages of life, and it's a Deflector kind of outcome. It's that kind of performance that we're striving to replicate here. Cundipp itself, it's a strongly mineralised, moderate grade gold copper system. The grade and the geometric variability is quite low. If you look through the historical drill hole announcements from Medallion, you don't see plus 1,000 ounce intercepts, but what you do see is consistent mineable widths and grades. So 2, 3, 4, 5 metres, 5, 6, 7, 8 grams per tonne. There's a selection of the plus 20 gram metre hits shown on this long section. They occur consistently throughout the ore body, and it's these grades that really drive the project economics. And it's that consistency, we believe, reduces resource estimate risk and by extension reduces the mine plan execution risk. Average depth of drilling here, 100 metres below surface, deepest hole into the system, 420 metres. The system's open at depth, ounce per vertical metre profile here, averages 4,000, peaks at 7,000. 100 metres below surface where the data density is at its greatest. We've consistently added ounces along strike and at depth here. If we could achieve and maintain an average ounce per vertical metre profile here of 5,000 to a depth of 500 metres below surface, which is still shallow for an Archean gold lode, then this area gets really interesting in terms of its scale and significance. There's also the opportunity to uncover new lodes here. Within the granted mining lease boundary, these lodes are projected to intersect at depth and in some cases along strike. There's the potential to uncover new lodes beneath the remnant Proterozoic cover to the south, and that's one of the targets that we'll be testing in coming weeks. And then we know that there's gold in the bounding tonalite as well. So all of these opportunities exist within a 1.5 kilometre radius of where we have located the processing plant in the pre-feasibility study. It's got great potential. It's a great address. We think it's got multi-million ounce potential over time with continued investment. Next slide, please. So focusing in on the resource estimate itself, mineral resource now stands at 1.3 million ounces of gold, 59,000 tonnes of copper metal. Combined, that's a gold equivalent inventory of 1.6 million ounces at 2.6 grams per tonne. Gold drives the project economics here. Copper enhances it. Overall metal content has doubled since we listed. Roughly 1 million of those ounces are in the indicator category. 3/4 of them are within 150 metres of surface, so potentially available for open pit mining. For every metre that we drilled since we listed, we've added approximately 20 ounces on a gold equivalent basis. And every ounce that we added cost us approximately $15 an ounce. That was a great business model when we were valued at $30 an ounce, find 15, have them valued for 30. Given the current valuation, not so attractive. And that's one of the reasons, it's not the only reason, but it's one of the reasons why we pulled back on the extensional program and began to focus on de-risking those ounces that we already had in the MRE. And we did that by commencing the pre-feasibility study almost immediately after completing this resource estimate in mid-2023. And the results of that PFS were announced in October of last year. Next slide. So PFS released in October last year. High level, the project produces approximately 780,000 ounces of gold, 16,000 tonnes of copper metal over a 9-year life. That's about a 92,000 ounce per annum run rate over that period on a gold equivalent basis. Pre-production capital, $163 million, all-in sustaining costs, $1,600 an ounce. That's Aussie. Net the byproduct credit. That study demonstrates that that metal can be commercialised using industry standard mining and processing techniques and then generate attractive returns over that mine life relative to the risk that we take on in a development scenario. The favourable cost structure, both in all-in sustaining cost terms and all-in cost terms, gives our shareholders that great leverage to $8 commodity prices because, again, that post-tax NPV lifts up to in excess of $500 million at the current spot prices. It's a really solid result. It's an important milestone for the team, for our shareholders. What it says to me is that this project is going to get built. It's really a question about by whom and under what circumstances. So the PFS itself, it was an exercise in maximising NPV. This is exactly the approach that you take with a bigger balance sheet and if you're an established producer. But with equity markets the way they are at the moment, tough at our end of the sector, it's clear that that capital hurdle that we need to jump here relative to our current market cap is seen as significant impediment. So we look at that hurdle and we think, well, if we can't go over it, well, can we go under it? Can we go around it? Is there some other way that we can commercialise that metal? So what we're looking at is other alternatives, and those alternatives may relate to seeking to maximise IRR as opposed to NPV. So one of the approaches that we're looking at taking there, next slide please, is in relation to the sulphide development scenario. So if you cut the Ravensthorpe Gold Project mineral resource in the fresh only above a 2 gram cutoff, it backs out a resource of 5.6 million tonnes at 4.3 grams gold and 0.6 copper for 770,000 ounces of gold contained and 36,000 tonnes of copper metal. Now, this is the highest value subset of this resource with simplified mining and processing. Upfront capital will reduce. The perceived met risk will reduce because we're treating a single met domain and the best understood of them. Copper becomes circa 20% of the project revenue on day one. Development footprint reduces. This can easily fit within our existing permitted envelope. And importantly, it's high value ore, so therefore it can truck and potentially lever off some of the established infrastructure that's within economic trucking distance. It doesn't crimp our growth opportunities. The oxide and the trans ore can always go through at the back end of the mine. When the capital's repaid, the banks are out of the way and everyone's much more relaxed about that material. So we're still scoping this scenario out. It looks extremely attractive from on the work that we've done so far. And we could produce a study quite quickly here, given the significant bank of work that we've done with the PFS in late 2023. So more news to flow on this front in coming weeks. Next slide. So bringing it all together, we can see the opportunity at Ravensthorpe really coming together, really taking shape. The resource is de-risked. We've done the work. We've grown it. We've de-risked it. We've got options now to commercialise that significant inventory of metal. I think there's a high probability that this resource continues to grow with continued investment, and that gives confidence in the longevity of the mineral system once it's up and running. The near mine, the regional discovery opportunities, they're potentially game-changing because we're really just scratching the surface of the Cundit Mining Centre and the Greenstone Belt more generally. So Ravensthorpe Gold Project, inclusive of the cash-generating camp, that's the core asset of the business. It's where the focus will remain in the short to medium term. Upcoming catalysts include the results from the regional drilling program, which will be getting underway in the next month, and then also more updates in relation to the sulphide development scenario. In addition to that, we've got the portfolio assets. Our neighbours nickel search, we've got investment there that offers exposure, our shareholders exposure to new nickel and lithium discovery opportunity in the underexplored Carling Up terrain out to our east. And then there's Jerta Cutter. That's over half of our ground holding in Ravensthorpe. It represents the entire accessible portion of a sedimentary basin, proven to be fertile for SEDEX deposits, as confirmed by the Trilogy deposit, which is the significant resource is shown there on this slide. Together, we've got multiple routes to value here, a really solid foundation to continue to look to return Ravensthorpe to being a significant gold and copper production centre in WA. We think we've been successful in achieving that. It'll be to the great benefit of our shareholders and also the local community. Next slide, thanks. So I'll wrap it up. We think Medallion represents a compelling opportunity for investors who are looking for exposure to advanced gold and copper exploration in WA. The business is well run. It's attractively priced relative to its peers. We own assets with great potential in a great location, and we're laser focused on maximising dollars into the ground that increases the value of those assets for our shareholders. If you haven't done so already, I encourage you to take a closer look at Medallion. I'll finish up there, David, and I'll turn it over to questions.
Thanks, Paul. You know, as they say, good things are worth the wait, and clearly worth the wait. A number of questions have come through. I just want to touch on the PFS and the NPV you published on the RGP in October 23. Yep. What assumptions were used, and how does the current gold and copper price environment change things?
So that's the PFS is about 6 months old now. So I think the base case assumptions are in Appendix 3 in this presentation. We used 1875. This is all US dollar commodity price assumptions. So 1875 gold, $20 silver, and $7,200 a ton copper metal. And I think the exchange rate was 0.64. So everyone will be familiar with where those spot prices are sitting at the moment. So things have changed dramatically. In broad terms, what that means is that the revenue line of the project has increased by approximately $500 million Aussie. Now, on a pre-tax basis, that basically flows straight down to that line. So that's the leverage that the project has to those commodity prices.
Question or statement and a question. Firstly, great job with the company to date. That's coming clearly from a shareholder. Re the sulfide development scenario, what else can you share re progress or future key milestones? And is this the primary development scenario now?
We're still working on whether this becomes the primary development scenario. The work's ongoing, but it does look extremely attractive for all of the reasons that I went through on that slide in the presentation. Certainly, capital's a significant hurdle for us. How do we access enough capital to build this project from scratch? And I think that's one of the reasons that Medallion trades at a discount to its peers. We are, in some senses, viewed as a stranded asset, given we are right at the southern end of the Yilgarn and not within trucking distance of any established gold processing plants at this point in time. So that hurdle is seen as a big one to clear. Now, the sulfide development scenario, it solves for a number of those problems. And so we are taking a very close look at it. And I think it's probably going to get there in terms of what we focus on and begin to run with. But at the same time, we are chasing down every conceivable different opportunity to try and fund the big project further along to that final investment decision.
Do you see any interest coming through for Trilogy given the recent uptick interest in copper?
Yes, we do. We have had a couple of approaches. Given where concentrate TCs and RCs are sitting at the moment, there has been inquiry on the Trilogy front. And if you establish a float plant to treat the RGP ore, then we don't talk about Trilogy a lot, but there is a distinct gold and copper domain there that's separate to the lead and the zinc. So it's about 1.4 million ounces of that resource is in that category. So it's certainly another growth option that we have in the portfolio if you get to the point where that flotation plant's established in Raven.
And what about M&A? Is there an opportunity, given where the asset is, given what is or needs to be around it to really take it forward, is there an opportunity to sort of pick up more around you to build some further scale? Or is there an opportunity for people to come and knock on your door? Clearly, nothing's been announced, so I don't want to put you on the spot in that respect. But you know, does that M&A sit in the back of your mind?
It's always there. It's all about generating the best outcome for the shareholders, and you know, we're focused on pushing this as far as we can. But it may be that we just don't get the opportunity to develop the asset. Someone else comes in and takes it away, and you know, that perhaps is the solution here to break the deadlock. So yeah, we're open to every approach. And then there's also, I think, there's infrastructure that potentially is complementary to what we're seeking to achieve that might be becoming available in the near future, and that might enable us to continue to break that nexus as well.
A lot of commentary here on what drives the re-rate, and you've touched on it a little bit, whether that's the securing of funding, sulfide development pathways, strategic partner. You know, how much does any of those overtake the others, or are they all looked at in unison, and hopefully one of them rises to the top at the appropriate time?
Yeah, they're all being run in parallel. I think that, you know, the tried and tested way to add shareholder value is make a new discovery. So we're giving ourselves every chance by rolling out this RC drill program. Those targets are priority targets. You know, we've reviewed that portfolio carefully, selected them very carefully, and so we're very excited about seeing what the results are going to roll in from there. So that's what we're focused on immediately at the moment. That's the real opportunity that we're driving ourselves. But then there's all these other opportunities as well. So sulfide development will be the next one that we either settle on, and then whatever happens, whatever might come from left field as well.
Well, shareholders like left field ideas, and they like shareholders working hard, like management, working hard to protect their value, and clearly you are doing that. The response, as I said, from the questions coming through and the comments coming through, are all positive. So while everyone's looking for the re-rate, they clearly think that Medallion Metals and management are doing the right thing. So hats off for that. Appreciate you coming on today, Paul. Look forward to following the company with interest. Look forward to seeing that re-rate come through in the not too distant future. So exciting times ahead, and we watch with interest.
Good on you, David. Appreciate it.